Ladies and gentlemen, AMC stock continues higher today by about 2.5%. Let's talk about what has been going on over the past couple of days, in my opinion, because Bloomberg's opinion is that the call activity yesterday was triple the average. And that can obviously push up the stock of AMC. But I think it's pretty clear, at least from my perspective, what is going on with this stock. And even when you look at this on a technical basis, you're at a very important level when you pull up the daily candlestick chart. You're right under the 100 and the 200-day moving average, guys. So let's dive into this situation. We're going to talk about some of the economic data that did come out today as well, because it was not so good for the Fed's ultimate mission to get inflation down, but it does show the economy is a lot stronger than some people do give it credit for. So let's get into this video. You guys already know the spiel by now. Hit that like button, subscribe to the channel, and if you guys want to come trade with me live in real time, link down below in the description of this video. So let's get into it. First things first, AMC stock is sitting at $8.34 per share. If you have been a follower of this channel and you have been watching these videos ever since the low of 2022, well, congratulations, you are up about 75% at the time of recording this video on December 2nd. So you've already seen a pretty good rally. And like I've said for a while now, if we stay above the 50-day moving average, I am bullish. I am not bearish until we go under the 50-day moving average. And what has happened since then? Ever since just 2 days ago, or really 2 trading days ago, you have rallied 20.5% ever since I've been talking about this whole 50-day moving average thing. And that's something to be very bullish about. Yesterday, you broke above the 100 and the 200-day moving average, and then you did close under that, or 2 days ago I should say, you closed under that, and then yesterday you had another solid day, up 1.71% to close out the trading day, and you did touch the 100-day moving average and then came back down, but you didn't retest the lows. You didn't fall back to, the previous day's lows, not even close. You held those gains and even added to it yesterday by 1.71%, and today you're adding to the gain yet again. So I do think this is a very positive sign, and we did have higher volume yesterday, and that was at about 97 million shares. And from my perspective here, you are seeing some smaller shorts getting squeezed out of their positions. And I think this crypto situation, essentially with the margin calls that are coming, people are just getting squeezed. There's no other way to put it. People are getting squeezed out of other positions because their margin bets on their crypto bets went bust. So I do think you're seeing an effect from that starting to play a role, and that's giving AMC a lot of this bullish momentum as shorts are slowly starting to cover on some of those short positions. I will tell you, you're not seeing the squeeze based off of it in a dramatic fashion. One could argue we've rallied 75% from the lows. You've kind of already seen a decent little short squeeze, but you're not seeing that pop off like event where the stock's going up dollars at a time yet, because people are just coming in and making new short positions. For the ones that leave, there's another one that comes in, and that is all very fragile in my opinion, given the state of AMC and the fundamentals that are actually improving at a very rapid clip. So when you put 2 and 2 together, one, you got to be bullish above the 50-day moving average. That is number one. If you're making trades, options, whatever you're doing, I think above the 50-day, you got to remain bullish. Under the 50-day, if we do break under that, well, you got to, cut some losses. You got to do what you got to do. But I don't see that happening until the markets take a turn to the downside. And we got all of our economic data out the way this week. I mean, today was the last day of real economic data for probably the next couple of weeks. You do have the CPI report, which comes out December 13th, but that's not even going to be next week. That's the following week after that, and it's going to be on Tuesday, and then you're going to have Fed Jerome Powell on Wednesday. So for the whole next trading week, you don't have too much that is going to move the markets. You got, PPI already, you got retail sales, you got the JOLTS job openings, you got the unemployment rate that came out today, you got so many data points that are big factors that the markets care about, and it just really didn't do anything too negative, right? You fell a little bit and the markets are down a little bit today, but by and large, they're brushing it off. I mean, the S&P 500 is only down 0.69%, and the NASDAQ down about 1%. And for the magnitude that this data actually was a beat, right, was bad for the markets, I think it's a positive thing that the markets are not down 2 or 3% right now. And you can see payrolls and wages blow past expectations, flying in the face of Fed rate hikes. Non-farm payrolls increased 263,000 for the month, while the unemployment rate was 3.7%, the Labor Department said Friday. The payrolls number was well above the 200,000 estimate, while the unemployment rate was in line. Average hourly earnings jumped 0.6% for the month, double the estimate, and 5.1% annually versus the 4.6% expectation. So pound for pound here, the economy looks a lot better than people are giving it credit for, at least in the job numbers and the actual wage increases that people are seeing. Looks pretty good. So this is kind of one of those things where it's not what the markets want to hear as far as the Fed raising rates. It goes to show the Fed could continue to raise rates if they want to. At least they're not going to affect the employment market all too much. But at the same time, it's kind of a positive thing, because what's worse, the Fed raising rates or the economy going to shit and going into recession? I would say a recession is worse, fundamentally speaking, because you actually see fundamentals come down. When the Fed raises rates, all it does is make people panic that fundamentals will come down, that earnings will come down. So it's not like anything is really happened in the grand scope of things. They've slowed down lending, they've done these things, but if the ultimate goal is to get a recession, I think, the longer it takes to get that recession is probably going to be a bullish thing. And I think that is, if I were to put one thing on it, I think that is why today is not a 2 to 3% negative day, because inflation is coming down and the job market is not deteriorating. So that is what really happened today. If we go ahead and look at the Ortex data with AMC and look at the options, first things first, today you have seen 15 orders totaling about $634.46 thousand, positive order value of 30%. And this is a lot lower than what we have seen over the past week. Over the past week alone, you have seen 154 orders totaling $33.38 million, positive order value of 57%. So not nearly as good as what we have seen over the past week. Even yesterday, you've seen about $4.5 million go into AMC options, positive order value of 70%, and that was comprised of 68 orders, guys. So not a huge option day today for institutional investors with AMC, and that's probably why the stock is, not doing too much, right? It's positive by 1.5%, but it's not up another, 20% like it was yesterday. So there's that. If you want to take a look at the live short interest, we can. It's sitting at 20.74%. It says it's down about 2% on the total number. About 2.57 million shares or indicated sold short or covered on yesterday, which, 97 million for volume, it would make sense in the grand scope of things. There's still 107 million shares that are sold short. So take it for what it is. If 2.5 million shares gave us a 20% rally, 2.5 million shares covered gave us a 20% rally, I like those numbers. I would take those numbers any day. So I'm not going to argue with that. And that seems kind of in line with, what I would expect to happen. Cost to borrow average sitting at about 38%, cost to borrow max at about 55%, and cost to borrow minimum at 30.24%. So looking very good in the actual data here. If we take a look at the days to cover, that is sitting at 6.81 as the volume has went up a little bit, but it just still goes to show how hard it will be for shorts to get out of their short positions when indeed they do want to, guys. And a last look at the technicals before we do wrap up this video. We're looking to retest and break out above that 100 and then 200-day moving average. The good thing is if we break out above the 100 and 200-day moving average and we close above that, you are in a zone in which we have not been at in a long time. And once you're above these moving averages, you can kind of freely trade because the trading algorithms, they're doing a couple things, right? They're more than likely shorting stock at the 100 and the 200-day moving average until it breaks out above that. Once you break out above that, the 100 and the 200-day moving averages will serve as support, and those trading algorithms that control 80 to 90% of the trading volume on any given day for the broad markets. Maybe it's more with AMC. Who knows? It's definitely highly manipulated by trading algorithms. Well, the market makers, they're going to start bidding up the stock, and they're going to start playing this for an upside move rather than continuously playing this for the downside move. And I think that is, something to be excited about. And the chart just continues to look more bullish and more bullish. So here, I think the risk to reward, I think you're definitely more skewed to an upside move here. I think there's a greater chance that the stock does continue to rally, and I think we are closer to the Moass than we have been at in a very long time. Just given how liquidity has dried up, there's not as much money floating around there to cover on short positions or to put collateral on these short positions to remain in them. It's just a solid fact. If you look at the crypto markets alone, not even to mention the bad loans that are out there that people are just completely sloshed out of that are never coming back, right? The money's gone. Crypto alone has went from almost $3 trillion market cap down to $700 million market cap. It's lost over 70% of its value. And a lot of these hedge funds that were also betting on AMC were also betting on cryptocurrencies. And a lot of them were long on these cryptocurrencies. After all, 2021 and 2022, the largest buyers of crypto were not retail investors. They were hedge funds, guys. So that is going to be all for this video. If you can't tell, I am very bullish. Let me know your thoughts on this down below in the comment section. Thank you guys for watching. Enjoy the rest of your days and your weekend. I will see you in the next one.